Hey guys, welcome back. In this video, we are talking about liquidity squeeze into force covering, $1 to 1,000, the short-term price targets, and many more in this video. Now, firstly, we're taking a look at this. AMC is clearly being artificially suppressed by 10 cents a week. What a joke. How much longer can it go on? At this rate, in 9 weeks, AMC stocks will be at zero, while the company is making billions. So we're taking a look at what's going on right now, and many of you are aware that the price is not a reflection of how well AMC is doing. When we take a look at the price, we're seeing the price decline. We're now below $1. This is something that we addressed in our previous videos. However, when you take a look at the fundamentals, you can see that AMC is improving wherever aspects that you are looking at. So this is the clear suppression that we have been talking about for a very long time. But we got to remember, the more suppressors, the higher AMC will go when it squeezes. And right now, we've already seen how much synthetic shares they're using just to suppress AMC for the time being. Firstly, when we take a look at some of the fundamental things, because a lot of people who doesn't believe that there is manipulation going on for AMC, they think that AMC is failing because of its own operations. Take a look at some of the things that we are obviously looking out for. We can see with the AMC partnerships, we've already seen how Netflix want to partner with us. We already seen how Netflix have collaborated with us. We have many more others in the future as well. And we have already talked about how this is beneficial, and this is just to showcase how AMC's demand is still there. People are still in need of AMC, wherever it's institutions in terms of other firms like Netflix, or wherever if it's just typical moviegoers who want to watch movies at theaters, they're choosing AMC. And so when we take a look at it from a fundamental perspective, if you want to talk about growth, we have partnership deals, we have increasing cinemas, we have improvements on cinemas. And then if you want to take a look at another side of the fundamentals, which is debt, we've already seen how AMC is paying off debt. We see how AMC restructuring debt, and we see how AMC is saving on interest payments on debt as well. So all of these things are just showing how well AMC is doing, and to really combat against those who talks about the fundamentals of AMC without actually taking a look. Now, the overall consensus for apes is still the same. Yes, there will be some people who talk about AMC, who are bad-mouthing AMC, who are selling AMC, and that's completely normal, that's completely fine. You will see sellers. But for the majority of people, for the majority of apes, nevertheless, you can see just like this user here, my last batch of AMC shares were at $1.02. 10,000 shares, then quick grabbed another 500 shares because why not? Monday, I will ring the bell for another 10,000 shares. There's no fundamental difference between 102, 170, 272, 350, etc. $1 is the same accumulation as it's been. And so this pretty much sums up what, in my opinion, what I think a lot of people say about AMC. Firstly, a big takeaway. You can see there is no difference between 102 and 350 because the majority of the apes are not going to sell AMC unless it goes into the hundreds, the thousands, the tens of thousands. And right now, anywhere below that, they just view it as accumulation zone. So the cheaper it is, the better it is for the apes, just like this user is viewing this opportunity right now as well. This applies to multiple other people. I know I can't speak for everyone, but with what I see on Twitter, with what I see on my comments, this is what I'm gathering. Now, there will be people who have different opinions, and again, that's completely fine. Like I said, this is just based off of what I'm seeing right now, is that people are viewing this as opportunities. There will be negative media, there will be negative opinions, but when you take a look at the actual investors, the actual apes, everyone views this as a discount because we know that AMC is improving. We know that AMC should not be dropping in price. And one more thing is that the fact that the lower we get, the bigger it is for us. The reason why we say this is because for the shorts, their risk is asymmetric. At this price, downside is limited, while upside can be sharp. The biggest risk would be something of a positive catalyst or a liquidity squeeze, any of which could trigger a rapid price rebound and force covering. So it's obviously very simple because at this point, the short sellers who, if there are no synthetic shorts, they should be covering right now. There is no logical reasoning for short sellers to be opening up new positions. Once again, this is talking about if there are no existence of synthetics, there is no logical reason for short sellers to be opening up shorts at this current market cap of AMC, at this current valuation, because it is not worth it when you do the risk management. But of course, they will still continue adding on to these. The reason for this is because there are synthetic positions. They're not shorting on AMC because they actually see it as further downside. They're shorting AMC because they need to, otherwise their billions of synthetics will have to be covered and they will lose hundreds of billions, if not trillions of dollars. And that's why they're doing this. So really, when you ask yourself, why would they short AMC now? Why would they create new AMC short positions at such an asymmetric risk management? Why would they do this? The risk to reward is clearly not there. Why would they do this? It's because of the fact they're not shorting because they view the future outlook of AMC to be declining, but rather they're trying to protect themselves from the billions of synthetics that they created to covering at, tens of hundreds of dollars, thousands of dollars. That's what they're trying to prevent. And once again, any rapid price rebound would force them to be covering their shares. You have to remember, AMC and GME stock will jump from $1 per share to $20,000 per share in the blink of an eye. They're from 20,000 to 115,000 within another blink of an eye, just like that, so on and so forth. Why? Because nobody has sold, everyone is holding and buying more. They've printed quadrillions of fake shares into the market to steal the public's money. Now, this is something we talked about before. Once again, everyone will have different opinions to where the price jumps. However, most people, or if not every ape, would agree that when the price jump, it would be a rapid incline. And it could go from $1 to anywhere. We've seen in the past how easily AMC can go up 40%, 100% in a day. Now, the only reason why it didn't continue was because it was then halted. Now, these halts were used for the reasoning of protecting retail, but we know that that wasn't the case. But it shows the fact that everyone is holding onto AMC. Everyone is wanting to sell AMC at a way higher price. That's why it was halted, because if everyone did want to sell AMC when it jumped up 40%, when it jumped up 50%, then the shorts wouldn't need to halt because they would have been able to buy all the shares and then covered all of their shares. It's because they realized that no one was selling at these heights of $40, of $100, of $300, that they are afraid that they had to halt AMC and push it down to create fear. And that's the reason. So to talk about, in terms of my opinion, I do believe that a massive jump from AMC is easily doable. The prices differs for everyone, but for me, from going from $1 to thousands of dollars, I definitely think it's something that is possible because of the synthetics that have been created. And you got to realize, at the end of the day, movies will never die. AMC is operationally more efficient now than 2019. Debt restructured, multiple new revenue streams, pre-Patreon metrics booming, underperforming theaters cut while adding more theaters that are profitable. The industry is primed and ready. AMC will capitalize on market share they have gained, and we are here for it. Bankruptcy is off the table, and there are no signs of distress acceleration from the lender. So this is basically what we've talked about, and this is something you have to understand. Going back to earlier about why I said AMC is not reflecting its actual value, is because we see, when you take a comparison of AMC now versus AMC in 2019, we're in a whole new, better position. And we're seeing AMC stronger than ever, especially that right now, they are not only cutting underperforming theaters, but they're also increasing new theaters that are profitable. And more importantly, theaters that will attract more people. So this is what you have to prepare yourself for. And this is why we've said that AMC is going to continuously grow, especially the fact that there are no signs of distress whatsoever. And once again, there's no science to see that the fundamentals will pressure fair value realization / pricing. And this is talk about the lower it goes, the harder it gets for them to suppress us. Because at one point, the valuation will just seem so ridiculous for a company that is the biggest within its industry to see its competitors to be into the billions of dollars, yet this company is sitting below sub 500. And that's what people will start to understand. That's what people will start to see. That's when kind of the normal retail, so the retail investors who are not familiar themselves with this matter, will start to also see the manipulation that's going on in this market. You can already see in terms of the dramatic improvement guidance for 2026, as we are now already matching Adam Aron's script of the Q1 realization on what it can do. And this is just to showcase how well AMC can truly grow. You can see the negative comments already this week in terms of, you can see, I've heard it all. The best efforts to demoralize AMC investors. I've heard bankruptcy multiple times, impossible. I heard a new CEO coming in, taking it private or bankruptcy. I heard buying at these prices bring the stock price lower, a bunch of nonsense. Now, already some of these things are ridiculous. Now, once again, bankruptcy, this is something we've heard for the past 5 years. I'm not even going to go into it. New CEO, again, there are no rumors of this whatsoever, but yet people are saying it. You know, there could be a 0.001% chance that this is true, but no one has said this, and it suddenly was brought up, and you just realize how ridiculous this is. And then the most ridiculous thing is buying at these prices is bringing the stock price lower. They're trying to say, if you buy AMC, the price will go lower. Again, I don't even need to say how ridiculous that is, but you can already understand what is going on. And you can see some of the things that comes with cinema, some of the things that we've talked about, which is highest premium experience that movies can offer. Going to the theaters are becoming cool and hip again. So in contrary to all of these negative comments on AMC, when we see actually what's going on, when we talk about the incentive for people to actually go cinema, it's being higher than ever. And especially with how AMC is trying to create premium theaters. Remember, this is something that they have been setting up, not just this year, not just last year, but in the past already. They have been preparing themselves for this exact moment. So I know that they are prepared. I know that they are ready. And it's just a matter of when the industry sees a massive boom. We're already seeing it boom. We're already seeing it increase and improve. But when we get that massive boom, especially with how many movies is coming out this year, that's exactly what we're waiting for. Another big thing, AMC Entertainment is the largest IMAX operator in the United States. Approximately 184 to 85 IMAX screens in the United States. This represents a market share of over 50% in the US IMAX segment. So earlier we were obviously talking about how big of a share AMC can grasp, and this is just to showcase that. And this once again just goes back to what we've said with AMC is within this industry the biggest. It becomes to a point where you can't say anything to talk about its valuation being at this current state and even lower, especially with everything that we have talked about. And it's why we understand the lower it gets, the harder it gets for these short sellers to suppress us. And the more potential there is, and the bigger return there will be for AMC. And a lot of people, not just us right now, not just the apes who have been here, but a lot of retail investors, a lot of institutional investors, and all of these people, they're realizing this right now. It's just that the guys who are in this are obviously big players. We are seeing some massive short sellers in here that are afraid of what's going on. So they're willing to be spending hundreds of millions, if not billions of dollars every single year to try and suppress this whole moment, whether it's through media, whether it's through the regulation, whether it's through the synthetics like we talked about. That's what they are doing. Another showcase of how well AMC, or rather the box office, is doing, 18.7% against 2025. So this is what we said with how AMC, or rather the box office, is improving year by year. And in return, AMC is doing so as well. So this isn't just me making up facts. This is something that you can actually see. And remember, even if AMC were to be, even if the box office were to be the same as the previous year, AMC's operations has become more efficient, meaning even with the same box office, we are able to make more money. Not to mention, we are seeing the box office get even bigger. So you can see how this is a multiplier effect on AMC. Now, a short-term price target we can see here, which is AMC coming in at $29, and then it can overshoot to 42 to 50. Like we said, a quick jump is easily doable. We have so many short sellers stacked up at these levels right now, where if we see AMC go up to $2 to $2.10, like we've said in the past, it will bring out some shorts. It will liquidate some shorts that will instantly push it to $3, which have also short sellers, and then it can continuously repeat and obviously go towards that $29 to the $50 price target. And that's what we obviously have to realize. And another big thing is coming in right now is we are seeing major stress signals in terms of which is happening within other systems, which we're talking about commodities. This is what we talked about with the explosion to the upside on silver, which will also bring AMC and HYAMC value up dramatically. And that's exactly what we want to see, because that is obviously beneficial. Now, one thing to note, one thing to mention is recently we are seeing more and more institutions closing their put on AMC. And this is what we've said. Yes, perhaps there are some short sellers who haven't created synthetics and were purely just shorting AMC. And now they decided to close because there are two reasons. Firstly, the risk to reward just isn't worth it. Anyone who trades, anyone who invests will just know that at this current state, the risk to reward is not worth it. Secondly, it's also because they realized how much higher AMC is about to go. They realize at this current point that they know that AMC can explode at any time. And so we're seeing more and more of them close. Not to mention, we're seeing them actually put more and more of these positions into longs. So this is them realizing that this is the value bottom of AMC. Now, in terms of GME, we're seeing that potential 82% chance to beat quarterly earnings. Bear in mind, this is poly-market. This is done by the, kind of the retail guesses. And so there isn't any confirmation, but typically it is something that you can use, but it isn't 100% because it's just what people are guessing. We're also seeing this GameStop coin to be at $2 trillion market cap. Something that's crazy, something that, should be talked about, and yet it's not. And this could be tied up to covering up naked short activities. We don't know, but the fact that it exists is already something that is ridiculous. Earlier, we were talking about silver, we were talking about commodities. You can see a lot of people are buying COMEX gold options at 15,000 to 20,000 for December 2026. So if you want to see signs of more potential reasoning for why the price is going to go up, this is obviously one of them. And now this is something that is extremely good for us, for AMC, for HYAMC, due to our investments. We're also seeing how Terraform Labs has won a massive lawsuit against Stream. Now, this doesn't actually have anything to do directly with us, but it just shows that these are the sort of tactics used by these firms to manipulate and corrupt the market. And you can see that they are obviously being fined for it. And, we can see that they wiped out $40 billion from investors. We don't know how much they've made, but they had to pay $1.2 billion. Now, this is already very, very big, but if they made 40, or even if they made 50 to 20% of that, there is still more than 1.2. And it just goes on to show kind of the cost of business for these firms, but it's to also highlight that they are manipulating the market. Now, one big thing, and is why I said we are in extreme volatility and why collaterals are failing, why hedge funds are failing, is because recently we're seeing massive volatility due to the global kind of issues, the politics that are going on. And you can see that the SPY had a massive reversal in after hours trade when President Trump says he's considering winding down the Iran war. Now, the reason why I say it's volatility is firstly because you can see this V-shaped recovery and how fast that was. But then we see the fact that there was then another talk by President Trump which talks about obliterating Iran's power plant, which was 24 hours after he's considering winding down. Now, I'm not here to put any political opinions on this. I'm just merely stating everything that has happened and to warn you guys about the volume, kind of the volatility that is going on in right now. You can see Bitcoin suffered heavily from this, dropping to $68,000. You can see by this candle. If you want to know how much it dropped, 240 million in 15 minutes. This just goes to show how crazy this is. And this is something that can happen to the stock market. Remember, the stock market will have more value losing from this. And this is what I'm trying to say in terms of you guys got to prepare yourselves for the volatility, but also knowing that this volatility is hurting the hedge funds more than it's hurting us because of our investments. And so we are in a better position. As always, now this is the financial advisor. Do take us a grain of salt. Make sure to do your own due diligence research, and I'll catch you guys next time.